So let's create a cash flow statement on a direct method. This is Labrador Company. I'm just going to push this data off to the side so we can sort of see the grid that we have set up here that will give us our guide. And this grid, of course, just comes out of your conceptual knowledge that you know basically the types of line items that occur in a cash flow statement and the various accounts that can help us to get there. So let's just kind of walk through it and see how it goes. The cash from customers, we can figure out the difference between sales revenue and cash from customers by seeing the change in accounts receivable. So let's see, the beginning accounts receivable, which would be the end of last year, is $6,000. And then the end of this year is $4,000. And sales revenue, which would have made accounts receivable go up, is $100,000. So then you can solve for this, and there's a lot of different ways to solve for this. So whichever way works for you, you can put an X here, 6,000 plus 100,000 plus X equal 4,000. So obviously X would have to be a negative number. You can analyze that the beginning was 6,000, it dropped by 4,000. So collections had to be 2,000 greater than sales, or other ways that you like. All right, so that's going to give us our first line on the cash flow statement. All right, what about inventory? So cost of goods sold is inventory expense, and they give us that. So now we want to use that to figure out payments. So we know the beginning inventory, which was end of last year, and we know end of this year. So we can solve for purchases, but purchases are not payments. Purchases are what makes accounts payable go up. So again, you can solve for X whichever way you like. And that 75,000 needs to be negative there. My error. Okay, now let's solve for X. I get 82, and so that's going to increase accounts payable. We know beginning accounts payable and ending accounts payable. Now we can solve for payments right here. And that will cover payments for inventory. So now we can put that in our cash flow statement. So general administrative is a little trickier because there isn't a separate general administrative expenses payable. And so we have to be a little clever about it. We know the expense, and it's possible the expense is fully paid. But we also know that some of the things that feed general administrative expenses are on our balance sheet here. So we see salaries and wages payable, and we see office supplies. Both of those feed into general administrative. And since those are the only two general administrative items that they give us here that shifted on the balance sheet, we have to assume those are the only two that did, because we can't analyze it from information not given. So we can start with general administrative expense. And if office supplies went down, that means that what you removed and expensed was more than what you bought. So expense was higher than payments. So we would remove that shift from expense to get to payments. Now the payable went down by 1,000. That means that payments were greater than the salaries and wages expense in general administrative. So we would add that shift back. We add that shift back, and so now we just do the math. And so now that payments for general administrative is going to be an outflow. So let's look at interest now. So beginning interest payable was 1,000. and it went down to 500, meaning payments were more than expense. And then we do see interest expense on the income statement, 3,000. So our payments had to be 500 higher than the expense. And of course, you can do that just by brute algebra, whatever you want to do. And then income taxes payable, same kind of rhythm. So we start with 3,000, the income tax expense off the income statement, and then we're solving for payments, and ending is 4,500. So since the payable went up, it means the payments are lower than what the income tax expense was by that shift. All right. Whoops. That's negative. Point at the right number there. There we go. That's a little better. All right, so then just math, add up your payments here, and then your net cash flow is your inflow from customers, less all those payments to the various vendors. Let me know if you have any questions.